Imagine this. You walk into the supermarket, pushing your trolley down familiar aisles. Reaching for your usual carton of milk, you find the price has jumped. The electronics store tells a similar story. Your favorite gadgets, now sporting hefty price tags. This might not be a temporary inconvenience, but a sign of deeper economic shifts. Recent weeks have witnessed a dramatic resurgence in protectionist measures. The United States, under President Trump, has imposed sweeping tariffs on goods from major economies. This aggressive move has sent shockwaves through the global market, raising concerns about an impending trade war. The question on everyone's mind is whether this marks the beginning of a full-blown trade war with far-reaching consequences. President Trump's decision to impose tariffs, particularly on imports from China, stems from his belief that unfair trade practices are harming the American economy. He argues that China engages in intellectual property theft and forces American companies to share technology. These tariffs are meant to protect American jobs and industries. Critics argue that tariffs are essentially a tax on American consumers who will bear the brunt of higher prices. They contend that tariffs rarely achieve their intended goal and often lead to retaliation from trading partners. The current situation resembles the trade war between the US and China during Trump's previous term. The back-and-forth tariff impositions created significant uncertainty, disrupted supply chains, and hurt businesses and consumers. The fear is that history might repeat itself, with even higher stakes, as the global economy recovers from the COVID-19 pandemic. China wasted no time in responding to the US tariffs, announcing retaliatory tariffs on a range of American goods. These tariffs target key American exports like soybeans and microchips, designed to inflict maximum economic pain. The impact is already being felt by American farmers, manufacturers, and businesses. Soybean farmers face a significant loss of market share as China turns to alternative suppliers. The technology sector is also bracing for impact, as tariffs on microchips threaten to disrupt supply chains. The trade dispute between the US and China reflects the broader geopolitical rivalry between the two superpowers. This rivalry, if not managed carefully, could spill over into other areas, further destabilizing the global order. The current trade tensions extend far beyond the United States and China. The interconnected nature of the global economy means that the actions of these two economic giants have far-reaching consequences. The European Union, caught in the crossfire, is considering countermeasures of its own. This tit-for-tat escalation threatens to unravel the delicate web of global trade that has underpinned decades of economic growth. The global trade network, built on multilateral agreements and institutions like the World Trade Organization, is facing its most serious challenge in decades. The WTO is increasingly sidelined as countries resort to unilateral action, undermining the rules-based system. As tariffs escalate and trade barriers rise, businesses face uncertainty and disruption. Supply chains are being disrupted, forcing companies to rethink their sourcing and production strategies. This disruption translates into higher costs, ultimately passed on to consumers. While some analysts hesitate to use the term trade war, the reality on the ground suggests otherwise. The speed and scale of tariff impositions, the retaliatory measures, and the rhetoric employed by leaders all point to a conflict already underway. This is not a theoretical debate about economic policy, it's a live battle with real casualties. Businesses struggling to survive, consumers grappling with rising costs, and a global economy teetering on the brink. The current situation is not a traditional trade war in the sense of a complete breakdown of trade relations. However, the tit-for-tat tariffs, the erosion of trust, and the weakening of multilateral institutions all point to a dangerous escalation of trade tensions. The impact of this trade war is already being felt across the globe. Businesses are delaying investment decisions, consumers are cutting back on spending, and economic growth is slowing. The International Monetary Fund has warned that the trade war is a serious threat to the global economy and has downgraded its growth forecasts. The longer it continues, the greater the risk of a global recession. This is not a time for complacency. The stakes are too high to stand idly by as the global trade order unravels. The escalating trade war is a wake-up call. It highlights the fragility of the global economic order and the interconnectedness of our world. It also underscores the need for greater cooperation and dialogue. We cannot afford to retreat into protectionism and isolationism. The challenges we face, from climate change to pandemics to economic inequality, require global solutions. As citizens, we have a responsibility to stay informed, understand the complexities of global trade, and hold our leaders accountable. The future of the global economy hangs in the balance. The choices we make today will determine whether we move towards greater cooperation and prosperity, or descend into a spiral of protectionism and conflict. The time for action is now. Let us choose wisely.